The successful warrior is the average man with laser-like focus, Bruce Lee. In the markets today, we see stocks are mixed. The S&P is down a little bit. The NASDAQ 100 is up. We see both bonds and gold up for the day. My friends, 10 to 15 minutes a day, that is all we ask to learn how you can chart these markets. It takes the nuances of day in and day out following these markets, 10 to 15 minutes. This is not a full-time job. This is where you monitor what's going on. You learn what weekly vertical crossovers are and what two-day recrosses are, and you follow the big trends. The weekly chart is our big chart. And when the markets are actually moving, which they usually are, we have very clear and concise crossovers that show us when to get in, when to get out of the market. And we want you to practice trade. It doesn't cost you anything to do that. We've got lots of great training. If you go ahead and subscribe at chartingwealth.com, you'll get our trainings every day. The training we have for you today, look at it in your show notes. The secret for maximizing the Monday effect. What is that? That is typically that the news that comes in on Fridays affects the market at the end of the day, and typically anywhere between 60 to 80% of the time what follows on with the particular stock or index, ETF, whatever it might be, in the coming week, many times parallels that as the week begins off. Might go longer, but that news as it is assimilated and digested by the market tends to make the market move in that same direction as things ended. That's what's called the weekend to the Monday effect. We talk about it much more in depth in that training, and it's for free there for our subscribers. You sign up and subscribe for free at chartingwealth.com. That list is never spam, never sold. What do we see going on with the S&P? As we look at the charts, we see, did we reach a higher high? The high, 369.62. The prior week, 369.85. So we've not reached a higher high yet. That candle is peaking up a little higher. Now, these are Heikin Ashi candlesticks. Those are different than your typical candlesticks. I'll put that Heikin Ashi training at the top right-hand side of the video screen as we go through this training. You'll see it pop up. I urge you to consider taking it. Very popular training. It's very important to understand Heikin Ashi candlesticks. What do we see with the price percent oscillator? That is our main oscillator. It is a percentage version of the MACD, the moving average convergence divergence indicator. What does that mean to those of you who are new? Probably not a lot. It's explained well in the book. You can look it up also online, but basically what the MACD is it shows, again, the divergence and the convergence of price movement over time. It helps you see the way that the market is trending as far as price goes. It is a lagging indicator, not a leading indicator like our derivative oscillator, which is a triple smooth version of the relative strength index. Again, relative strength showing how quickly an asset class maybe, or an equity with whatever it is that you're looking at, could be rice. That's the way the candlesticks were initially developed. Rice traders in Japan. That's why they're called Japanese candlesticks. But what the derivative oscillator helps us see is price tending to trend toward the norm or increasing in its variance. So anyway, it's just something that helps us watch and see how the wave is developing. Those of you who are surfers, you understand, did I say developing? Developing. If those of you who are surfers, you watch waves when you're out in the ocean, and you know sometimes you just can't catch a wave because the waves just aren't peaking right. Sometimes the market does that. That's what was happening back in October. It was just a crappy wave because the market was fluxing. Same thing you get sometimes in sets when you're out in the ocean. Other days, you have clean, beautiful waves that move up or down. And again, we like that. We appreciate that. We know, though, that the market, just like the ocean, is not always giving us good waves. That's why we have signals that we don't pay attention to and rules that if we do get into something that's not working, just like you do on your surfboard, you get out of that wave. You realize it ain't going nowhere. You're not going to waste your time trying to stand up on it because it's not going to peak. and then go down. Same reason, and that's, again, surf analogies are such great ones because price moves in waves of fear and greed is an easy way to look at it. So what do we see happening? We see that price movement weakening a little bit as the week starts. The derivative oscillator, our leading indicator, still moving up, but not as strong starting the week off. We go to the 2-day chart, and you remember that the prior 2-day candle had ended on Thursday, so this latest candle is ended. It represents Friday and Monday, and it is a higher candle on the 2-day chart, moving up quite nicely, tying together with that prior candle. Price percent oscillator heading up, derivative oscillator losing a little bit of momentum. Now we dig into that half-day chart. That's where we see the weakening, particularly in the afternoon, slowing down in the morning and then pushing through that 4-hour trend line in the afternoon. We could, or half day, we could draw that half-day trend line a little better right there, maybe even a little better there. I'm trying to capture, there we go. I don't want to cut off as much of that bottom. I want to try to connect 3 candles as best I can. We can see at the end of the day, price is right there on that half-day trend line. Hasn't crossed over, so again, we'll have hope it'll just keep on gaining some energy. Remember, we had that weekly vertical crossover going up, jumping in point, what, around the 360 mark, and how high has it gone so far? Up to 369.62, so that's nice. We'll continue to watch, see how it develops. What about the Qs? We didn't quite have a weekly vertical crossover at the end of the week. It is trying to cross over up for the day nicely, 0.57%. Nice candle going higher high, higher candlestick also, that's good. Pulling away a little bit from the red signal line. Price percent oscillator moving up, derivative oscillator positive, 2-day chart moving up nicely, just right like stair steps. That looks good. And we see the half day is just sort of sliding sideways. We're going to redraw that, try to connect the latest candles. Always want to try to have, you can always connect 2 candles. We like to try to connect 3. So we'll go ahead. Can we connect those last 3? No, not really. So we'll connect the prior 3, and we see again derivative oscillator is maybe losing a little bit of energy, price percent oscillator flat. So the Qs is moving in a nice direction. Hopefully it'll keep building energy, and we'll have a confirmed weekly vertical crossover at the end of this week perhaps. Now, I know some of you, because it was so close, jumped in. You've done okay so far. Hope you're filling out your trade worksheet and practicing that trade. Not opposing that, just encouraging you to learn all you can learn. We leave stocks, go to bonds. What do we see going on? Bonds up for the day, 0.90% now. Starting the week off, though, we can see the average pace on our Heikin-Ashi candlestick is down. The derivative oscillator gaining downward momentum. That's from all that down movement in the prior candle. Price percent oscillator is losing a little bit of that down angle. So we look at the 2-day chart trying to cross over going down, but my friends, just not managing to do it. If you look over on the left-hand side of the screen below that first horizontal bar, you'll see PPO in blue. That gives you the actual setup of it to the 10 and the 24. But when you look over there, you can see 0.73 and the exponential moving average 8-period 0.73. So it's not crossed over yet. We'll see how the week continues. And again, this will be the Tuesday-Wednesday candle to close the market on Wednesday. If you continue to have down movements, you could have a 2-day recross. That means the 2-day is rotating over, crossing down in the direction of the weekly. We will see. That gives you a potential jumping in point. That would happen at the close of this next 2-day candle, which would be on Wednesday afternoon at 3:50. That's right before the market closes. Check it out. Put it in your show notes to watch for that on Wednesday. What do we see going on the half-day chart? Up in the morning, about the same in the afternoon. Derivative, this means we didn't go above that peak in the morning. Derivative oscillator losing downward momentum. It peaked on Friday afternoon, and the price percent oscillator heading up, but still negative. So we'll continue to watch. Make sure to note that potential 2-day recross in your show notes for Wednesday. Go to gold. up 1.5%, almost 1.49. We have a green up candle that's forming for the week. Price percent oscillator still heading down a little bit. Derivative oscillator losing downward momentum. First time in 3 weeks. Well, really in 4 weeks because it was flat after that week in on the 13th, Friday the 13th. So we'll see if this trend is changing. I can't wait for gold, since it peaked back in August, to finally start moving up strong. Don't know that that's happening. Still below the weekly trend line, but we'll wait, watch, and see, and be ready for it. Look at the 2-day. That is moving up quite strongly. Still negative, but getting closer. Perhaps by Wednesday, we'll have a 2-day crossover going up. That would portend well. We have now 2 2-day candles, 4 days of up movement. It's nice to see. We go to the half-day chart, and we can see it's up in the morning and the afternoon. And again, we can redraw this trend line, see what we can connect. Going to be sort of hard to do. There we go. Okay, so we see up movement in the morning. Again, it peaked in the morning, up a little more in the afternoon. So that's where we are. As we end the day with gold, we always end with gold. We always start with the S&P, go to the NASDAQ, then bonds, then gold. People ask, why do you do these 4 ETFs? Because they're liquid, wonderful ETFs. They're trackable. They meet all of our parameters in backtracking and being able to follow. And again, want to know more about what we do? We've got a great book for sale, Charting Your Way to Wealth. Follow the link in the show notes. Appreciate all of our Patreon supporters. Thank you all for being with us. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.